Okay, Assalamualaikum and welcome back. Now we are going to do question final exam July 2021. And question final exam July 2021 will be the one that you have here in the screen. You have the question Keriangan Berhad, where the year end of the company is 31st of December 2020. How do you know? Because when you look at the requirement here, look at the requirement part here, straight away go to the requirement. You will see that the company's financial statement of cash flow that you need to prepare is for the year ended 31st of December 2020. So that was the date of reporting date, right? And you are asked to use the direct method. So the direct method is what you are going to use, direct method, right? So direct method meaning that you are going to do similar to question February 2021, but this question is much simpler. And the second part of the question is asking you to analyze the differences in preparing the statement of cash flow using the direct method in comparison to the cash flow preparation using the indirect method. So that one, the answer, I have already put it here. Later you can check. Right? I've already put the answer here. These are the answer to the second part of the question. But our focus will be the first part of the question. And what we will do is we will first do the drawing of the template. We will draw the template. So since this is direct method, again, you will draw the template. So I've already drawn the template here and I've already color coded my activities according to the purple, blue, brown, and green, the color code that I've used for my presentation. So you should make sure that you start with cash flow from operating activities, as this one is for direct method. Okay, what I will do now is I'm going to straight away prepare the template. I've done that together with the cash and cash equivalent template as well. So you can see at the bottom here, this one is the cash and cash equivalent template. Okay, after you have done that, you can now find out what are your cash and cash equivalent. So if you go to the first information number 3 there, you would see that this one is cash and cash equivalent. Like this one, information number 3 is cash and cash equivalent because you are informed marketable securities cash equivalent. So apart from that, you have to check here. These are cash and cash equivalent. This item, cash and cash equivalent, right? And let me just take a green there. And then there's another, is there any item in the current liability section which relates to bank overdraft? None. You also need to check if there are any short-term investment that may qualify as cash and cash equivalent. So there is none. So these are the only thing that is going to be included in the cash and cash equivalent. So we will include here. We will include the cash and cash equivalent here, right? And you can compare the one at the beginning and the one at the end. You can see the changes. If the changes, you can see here there was a decrease for the marketable securities by 11,528. So does the cash at bank. There was a reduction to 106 to 56, right? So therefore, all this will result in a net decrease. So there will be a net decrease. That net decrease, you must write net decrease. Do not write net increase. Why net decrease? The balance has reduced. So therefore, this is a net decrease. The balance at the beginning was higher. Balance at the end of the year was lower. So that gives a negative or reduction. So again, this is a net decrease. After you have done that, you can include the one at the end of the year here, the one at the beginning of the year here. Make sure to include that correctly, the net decrease, by putting the bracket. So at the same time, you must take note that the total from the 3 activities, if you prepare the statement of cash flow after this, must come back to the figure 117,784. Okay, we will now do that. And first, what we'll do is before we do that, I'm going to color code the activities. So whatever that will fall under investing activities, I color code as blue. Okay, blue. Whatever that will be under operating activities will be purple, just to make sure it's easy for us to differentiate. And whatever that is going to be under our financing activities, that will be brown, okay, together with the loan. And sometimes the reserve also may have been affected, like the case of retained earnings, in case that was used for any, let's say, purchase of own shares for cancellation, or anything to do with perhaps bonus issue out of the profit. And it may have also affected the financing activities, although that does not involve cash, right? And you can see here current liabilities are and accounts payable, these are operating, but dividend payable will be under financing. So do that first. After you have done that for the color coding, you can now find out what are the changes to see whether or not these changes, yeah, I've already done that. Does it relate to any cash flow movement? Either, for example, the first item here, does this relate to disposal, for example? Take note that the property, plant and equipment is at the carrying value, meaning that the property, plant and equipment is already at cost minus accumulated depreciation. And if you check in the statement of financial position given, you would not see any accumulated depreciation anymore, because it has already been deducted to the cost minus accumulated depreciation to get the carrying value. Do you have any questions so far? Do you have any questions so far?
No, madam.
Okay. I'm going to proceed, yeah. So just be with me and follow me. Okay, the first thing that we will do is to first find out, again, the same thing, find out the cash receipt from customer. So we'll first write the cash receipt from customer here. And you can see that I have already prepared a few arrows there, because the arrows will show you where do I get the figure here from. For example, cash receipt from customer in this question should be this figure, 6720,920. How do we get that? First, you need to put the balance in the accounts receivable. Put the balance in the account receivable. So the balance in the account receivable, beginning balance, where do we get the balance? The balance would be from the statement of financial position information. So let us take that first item. Where do we get this? Is from here. So you need to go and check this figure, 400,938 and 472. Include that. So you are doing the checking for this, checklist for that, you do that. Just now you have already done the checklist for the cash and cash equivalent, right? Okay, we are done with that. Now put the balance at the end of the year. The balance at the end of the year is 472. Yeah, 472 taken from the information here. Then put the sales or the revenue. So if you can see here, the revenue is actually we are talking about sales. Okay, so sales here was 671. So we assume no information. We will assume all these are credit sales. If since there are no information, so you will include the sales here. Right. After you have included the sales here, total up the debit side. And now what we are trying to find out is we are trying to find out the amount that we receive from our customer, the bank amount, which is the one that we debit to the bank account, and the one that we credit to our accounts receivable. And this is the one that you will show here. The one that you will show here. So I'm using blue to show the inflow, and the blue is in an inflow. So inflow meaning that debit bank, credit account receivable. Okay, that was the first one. Now we go to the second one, which is cash receipt from the cash payments to the supplier. Cash payment to the supplier where you need to go and reconstruct the inventories and accounts payable, because your target is to find this actually. You're trying to find out how much is your amount that you will have to show in the accounts payable, and how much is your payment to your supplier. To do that, first go and put the balance of your inventory. You get the inventory balance at the beginning and inventory balance at the end of the year. Where will you get it from? It will be from here, right? And then go and get the cost of sale. Just now we take the revenue. So when I color code it, it shows that I've already made the analysis. So 631920 include in the inventories. So these are the cost of sale, and you will get the missing figure that you are looking to get the cash payment from supplier. Before you can do that, you need to find the purchase, and these are the credit purchase. So the credit purchase is by taking the total minus the balance brought down, you get the credit purchase, which is 625688. And this one will be shown in your accounts payable, because you get this to put in the accounts payable. Now you will put the accounts payable balance at the beginning, then put the accounts payable balance at the end of the year, and total up the accounts payable on the credit side, and the debit side will equal the credit side, of course. And the missing figure here, the missing figure will be your accounts payable, the amount that you will have to pay to your accounts payable on the and shown in the cash flow to be cash payments to the supplier. So you can also color code the amount, where red is outflow, the blue is an inflow. Do you copy me? Can you follow me or not?
Yes, madam, can.
Okay, okay. You can see I put the arrow here. The one that you have here is the one here. The one that you get here is the one here, so that it's easy for you to go and cross check. Yeah, that was what I did just now. Now, next one is the cash payments to supplier. We have done that. Now we move to another one. Sorry, that one will be cash payments to other expenses. So when we say other expenses, yeah, other expenses here refers to other operating expenses. I put here operating expenses. And when I say other operating expenses, yeah, these are going to be other expenses that involve cash. So if you can see here, operating expenses, other expenses. Wait, I just put it properly for you. You can see that in the statement of profit or loss, go to the statement of profit or loss. Okay, for the items that you have already checked just now, you have already analyzed, make sure you have already put a mark there, a tick. And that was also for the items inventory. Okay, those are done. So it shows that you are done. So now go to the admin and distribution. These are actually expenses, right? And these expenses are operating expenses. So let me just put the title correctly here. It should be operating expenses paid. Yeah, operating expenses. Okay, operating expenses, it means this is selling and admin. Okay, done. Put the selling here and then the admin here. Where do we get this? Selling admin, the total 303880 is from here. The two total here. So if you take this and you go and sum them, you will get the total 303880. Okay, so that is the one that you will show here. Our target is to find how much is the cash payment for the operating expenses which involve cash. So here you need to go and check if there are any accrued balance or prepaid balances in the statement of financial position. So if you can see here, under current asset, you can see there are beginning balance for prepayment and also the opening balance. So that prepayments, the beginning of the year will put on the debit side, and the one at the end of the year we will be putting it on the credit side as carried down balance. At the same time, check your current liabilities if you have any accrued admin, accrued salaries, or maybe accrued advertising, any other accrued expenses. If you have that, you also need to go and reconstruct your operating expenses by putting that. But for today, there are no operating expenses which relates to accrued expenses. They are just relating to the prepayment. So you can see that the prepayment I put on the debit side, the balance brought down, and the balance carried down, it was on the credit side, balance carried down. That was taken where from? From the statement of financial position. Okay, take them correctly. After you have done that, you need to go and take note that there is a depreciation in this question. So the depreciation, you are informed, has been included in the admin expenses. Depreciation is a non-cash expense, and I use this color. If you recall from my lecture, I use this color, yeah, which is the turquoise blue for the non-cash expense. So this one must be removed from the admin expenses because we are just interested to find out what are the admin expenses that we paid in cash. Here you are informed out of the 299,110, 88,214 million, was related to depreciation. So you need to remove. So to remove, you will have to go and remove from here. So you will go and put the depreciation here. Yeah, so you remove. And this is, I put blue because that was non-cash. Then now you will be able to find out your cash payments to operating expenses or other operating expenses paid. That would be now 213,852. 213,852 what you paid. So when what you paid means there was an outflow. So this one will be reflected here. And that will be an outflow. So that should be put in bracket. And now you have the cash generated from the operation to be 321,036, and these are in million. Do not be careless by not putting the million sign here. Make sure you include that. Next item is the income tax. So trying to find the income tax paid during the year, right? So let's find the income tax paid. To do that, you need to first check your information in case that was given directly. In our case, no, it was not given. The income tax, you need to go and set up the account and you need to find out what are the income tax yourself, right? Okay, so therefore you go and set up the income tax. So go and check what do you have in your statement of financial position. Your current liability shows the tax payable balances. Check also in the current asset if you have any tax recoverable information. In our case, none. So you are going to take the tax payable information. The one at the beginning of the year, you will include in the balance brought down and on the credit side. And the one at the end of the year, it will be the balance carried down on the debit side. Okay, we'll be doing that. Here, you first put the balance and then put the balance carried down of the tax payable here. Right? Put the amount that was taken directly from the SOPL, and now take the tax expense that was shown in the SOPL. So the tax expense shown in the SOPL was, if you can go to the tax expense here, that was 29.078 million. Yep. So I am color coding that as well, so that easy for you to go and check which one belongs to which. So this one is actually here. So put it here. Now our target is to find the tax paid. So to find the tax paid is going to be the difference between the debits total the debit total with the balance carried down. First, total up the credit side, take that total minus the entries that you have on the debit side, and this is the tax paid during the year. Sometimes you may be given the information on tax paid directly here in the additional information. Just make use of it. No calculation is needed for you to set up the T account whatsoever. So you just do it whenever it is relevant, right? Okay, so that was tax paid. So I use the red to show the outflow. Now, next one is about the finance cost paid. Finance cost paid, which is that will be the interest, finance cost or interest. Remember to also take note that if there are any redeemable preference dividend, that is also part of finance cost. Debenture interests are also part of finance cost. But in this question, there are no debenture. In case you have debenture interest, that is part of finance cost. Okay, go to your current liabilities. And check if you have any interest payable or finance cost payable. Do you have anything, class, here in the current liabilities? Do you see any interest payable, debenture interest payable? Do you have any of it?
No.
No. So what if that is the case, it means that you do not need to take time to go and reconstruct the finance cost or interest payable account. What was shown here will be the one that you will have to show as also the uh, interest paid. So what was charged here was actually the interest paid. So you don't have to go and calculate that. You just take this figure. What was charged in the SOPL was actually what was paid during the year. How do I know? Since there are no accrued or prepaid, finance costs payable. So you just straight away take that and put it here. Take that figure there and put it there, and just make sure that you know that is an outflow. Yeah, outflow. You don't have to color code this, but I'm just doing this to show things better. Next one is cash flow from investing activities. This question is quite short. So the only item on the investing activities that was highlighted here is property, plant, and equipment. So you can see that at the beginning of the year it was higher, at the end of the year it was slightly lower, and that shows that there was some disposal perhaps during the year. To confirm that, we have to check the additional information, but nothing was informed. This one has been done already. Just now we did this, so I have already analyzed that. So what we will do now is we are going to look and open up for a while the plant and equipment. And for your information, why are we doing that? Because we need to go and put the depreciation into our plant and equipment account, since the plant and equipment account given here is at the carrying value. Remember earlier I mentioned the carrying value is what? Cost minus accumulated depreciation. So you put the depreciation there, and after you have done that, you will total up this side, and there is no acquisition during the year, so you can assume that the difference on the was on the debit side. We need to go and check. We need to check the total. The total is this much. And if that was the case, there was actually an acquisition. So it looks like a disposal, but it was actually an acquisition. How do we know an acquisition? Once we put our depreciation, the credit side is greater than the debit entries, right? So the credit is more than the debit. So meaning that the difference is on the debit side. The difference on the debit side, that means that this is an acquisition of what? Acquisition of property, plant, and equipment. Acquisition of property, plant, and equipment, which is an investing activities. Okay, so that investing activities, this one is what you spend. So that was an outflow. So 10,000 outflow. Okay, 10,000. Next. you can put that figure in the statement of cash flow under the investing activity. So the amount 10,000, you will put here 10,000, and that will be an outflow. And this is actually acquisition or purchase of property, plant and equipment. You don't have any other property, plant and equipment. Everything was grouped together into one account. The next item that will be under investing activities, bear in mind, it will also include investment income as well as in case you have your interest income. Let's say here you have another item, interest income. The interest income is also going to be included in the statement of cash flow after you have already analyzed there is no other things that you need to go and adjust it for. Here for the investment income, check on the somewhere in the current asset section if you have any dividend or investment income receivable. Do you see any income receivable here apart from accounts receivable, class? Do you have any of that? Do you see any dividend receivable here?
No.
Do you see anything? Nothing, right? So dividend receivable is actually an accrued asset. So meaning that you have earned but you have not received, but in this case none. So this one is similar to the case of finance cost, where you just take this as your investment income received, because no other information. So this is also your investment income received since there is no other adjustment for you to include. So we just put here that was actually given in the statement of financial position, and this one is directly from SOPL. Yeah. So, okay. Next, you have done this. So you have the total for net cash flow from investing activity to be 3022, which is a negative or outflow, net cash outflow. Next, we go and do our simple one first, which is our financing activities. We do the dividend. In this question, dividend information is very easy. Why? The question gives you directly on dividend. So whenever you are given the information on dividend directly, don't waste your time setting up the dividend account. You don't have to set up the dividend account because you are informed dividend of payable of last year was paid this year. So this year, this is last year dividend. You go to this section. This is last year, this is this year, right? So this was dividend of last year, 42,830. This was the one that was paid last year. So meaning that this equal to this figure. Okay, so you will just take this figure that was taken from here and put straight away in the cash flow from operating financing activity, and that was an outflow. So outflow, right? So you do not have to set up the dividend account. Even if you set up the dividend account, let's say suddenly you want to set up the dividend account, that is going to give you the same answer. Jawapan dia sama, right? You will get the same answer, which is 42,830. You'll still get 42,830, which is actually the same answer here. So don't waste your time setting up this if that was given directly. So I will just undo this. Okay, so that you will just take the one here. Next is the last one, which is on the we have done this, we have done the dividend, right? So we have done the tax payable. So I will just tick whatever I've done. So there are two things that you have here, which is the share capital and the bank loan, right? So there are a few more here for you to take note, whether or not any changes that will bring or give cash. So for the repayment of loan, if you set up the account, or if you just go and check the amount, sorry, that was not the one. We are doing the loan here, the one at the bottom here. Loan is here. So you will get the information here. you will see that the balance at the beginning was 620, the loan. At the end of the year, the loan balance goes down to 300,000, and you have the reduction in loan by how much? By 300,000. So it shows that you have paid the loan during the year, debit, loan, credit, bank, loan. So that is why the repayment of loan was an outflow. So it was an outflow. For the share capital, you can see no changes to the share capital. There was no changes, right? When there was no changes, what does that mean? That means that there are no issue of shares, no bonus shares. Yeah, if you want to further confirm, yes, you still can further confirm. How? By looking at the additional information in case there are some information relating to bonus issue whatsoever. So if you do that, right, you would see that this would be no, there are no information on that, so therefore there are no changes related to the share capital, so nothing to do with the cash flow. So you are done with that. The share capital, even if you do open this like what I've done here, you will see that there are no bank, no movement of share capital, meaning that there are no new issue of shares, no share buyback whatsoever. Now, the last item is to find out the net cash flow from financing activities, and you get an outflow. Outflow. Yeah, outflow, net cash outflow, because it is in bracket, meaning that negative cash flow. Same goes for the second item. And this should come back to the total 117,784, a negative cash flow. Okay, that's it. That was the end of this preparation of cash flow for this question. Remember to always show the cash and cash equivalent as part of the answer, because sometimes marks are allocated for that. So I'm done with that. Thank you for your attention. I'll see you when I will see you.